So, the stock market is crashing again. You're probably seeing a lot of red in your portfolio, the news is screaming about recessions, and social media is flooded with people panicking and selling. But guess what? This is actually one of the best times to build wealth, if you know what you're doing. Seriously, some of the richest people in the world got that way by making moves when everyone else was pissing and shitting themselves and running for the exits. So, instead of panicking and ruining your new Calvin Klein underwear, let's talk about why market crashes happen, why you shouldn't freak out, and how you can actually take advantage of all this chaos to come out richer on the other side. Let me show you how. First, why do markets crash? Alright, before we talk strategy, let's understand what's going on here. Stock market crashes usually happen for a mix of reasons: high inflation, interest rate hikes, political instability, global events, or just plain old investor fear. When people get scared, they sell their stocks and buy tampons. But jokes aside, when they sell, prices drop. And when prices drop, more people get scared and sell. It's a cycle, and if you've been in the market for a little while, you've seen this before. But here's the thing, crashes are completely normal. The market goes up and down, and if you zoom out and look at history, you'll see that it has always bounced back, every single time. The biggest mistake investors make. The biggest mistake people make during a crash is panic selling. They see their portfolio down 20, 30%, maybe even more. They soil themselves and they freak out. I'm losing money. My wife won't go down on me. I need to sell before it gets worse. But let me be clear, you only lose money if you sell. If you hold, it's just an unrealized loss. It's just numbers on a screen. And if history tells us anything, it's that the market recovers. Meanwhile, wealthy investors see these same red numbers and think, nice, everything is on sale. That's the mindset shift you need to have. Instead of seeing a crash as something terrifying, see it as a massive clearance sale on stocks. How to make money in a market crash. Alright, so now that we know crashes aren't the end of the world, how do you actually take advantage of them? Here's what you need to know. 1. Stay calm and zoom out. Seriously, just take a deep breath. The worst thing you can do is make impulsive decisions based on emotions. Look at the bigger picture. If you're investing in solid companies or index funds, history's on your side. The market has survived world wars, financial crises, recessions, pandemics, you name it, and every time it's bounced back to new highs. 2. Buy the dip, but be smart about it. This is where you can set yourself up for massive gains. Instead of trying to guess the exact bottom, which, let's be honest, is almost impossible, use dollar cost averaging. That means you invest a set amount of money at regular intervals, whether the market is up or down. Over time, this lowers your average cost per share and sets you up for big profits when the market recovers. 3. Focus on strong companies. If you're buying individual stocks, don't just throw money at random companies. Look for businesses with solid fundamentals and a big bulge in their pants. Strong balance sheets, steady growth, and products people will still use in 10, 20, or 30 years. Think Apple, Microsoft, Amazon, Google. Companies that have been through crashes before and came out stronger. And if picking stocks isn't your thing, no worries. Just invest in index funds like the S&P 500. It's the simplest way to ride the market's long-term growth. 4. Increase your cash flow. If you're worried about investing money during a crash, the best thing you could do is increase your income. That could mean picking up a side hustle, freelancing, selling stuff you don't need, whatever it takes. The more money you have coming in, the more you can invest in assets that will grow over time. 5. Think long-term. This is the key. The stock market is not a get-rich-quick scheme. Just like your significant other, sometimes they go down, sometimes they don't. This is what the stock market is all about. So don't sell as soon as you see a little red. The real money is made by those who stay in the game for years, even decades. Look at Warren Buffett. He's one of the richest people in the world because he buys good businesses and holds on to them forever. That's the game. So don't stress about what the market is doing today, next week, or even next year. Think in terms of 10, 20, or 30 years. So, what's the takeaway? Market crashes suck in the short term, but they're gold mines for investors who keep a cool head and clean underwear. While the average person is panic selling and locking in their losses, the smart money is buying assets at a discount. And when the market recovers, and it always does, those who stayed the course will see massive gains. The question is, are you going to panic like everyone else, or are you going to use this as an opportunity to build wealth? Let me know in the comments what moves you're making right now. Are you buying? Holding? Still freaking out a little? Let's talk about it. And if this video helped, do me a favor. Hit that like button, subscribe for more investing content, and I'll see you in the next one.